Hello everyone and welcome back to another HPD Trading video. This is Yazdan here, and today's video is it's a little update regarding the interest rate decisions made by the Bank of Canada and the Fed on the 29th on the Wednesday. Hopefully it'll be the same day where I upload this video, and I want to kind of discuss what these policy meetings and the decisions that they made have in the future, what effect it will have in the future. So, going to Forex Factory real quick, we can really just see that at 2:45 p.m. in GMT time, that the Bank of Canada did cut rates by 25 basis points as expected, and the Fed did hold rates as expected as well. And I want to quickly go to the Forex markets here and discuss show what kind of effect these decisions had. So for the CAD, as we can see, we can see a swing high and a swing low. It's a neutral day for the Bank of Canada. So what the reason for this is really all to do with the buy the rumor, sell the fact, and in this case, sell the rumor, buy the fact, where the decisions that are expected to occur, that have a high likely probability of occurring, is already priced in by the Forex market and by investors, by traders. It's already priced in. So as we can see, throughout this, I don't know, for these 2 weeks, the CAD has been falling, and definitely this is a big major factor is due to this interest rate decision. As the higher the interest rates, the stronger the currency. The lower the interest rates, the weaker the currency. But it's a lot more complicated than that, and I'm sure we're going to discuss this moving forward. And if you go to the United States, the dollar, we can see a bullish day for the dollar, but nothing too crazy here. And really, I think the continuation of the devaluation of the dollar is really just to get extreme bargains because the dollar is expected to rise throughout this year due to Trump's very bullish stance on the dollar and very bullish stance on the economy. So it is expected to rise. The dollar did fell due to conversations about the tariffs and Trump's own personal opinion of cutting rates as soon as possible, which he doesn't really have much influence over, as that is Jerome Powell's really job, and Trump doesn't have much power over that until Powell's term ends during 2026. But until then, the Fed really will do what they do, I guess. And so let's have a look at the Canadian the quotes that have been made. So the Bank of Canada cuts its key interest rate by 25 basis points to 3%, marking 200 basis points in the rate cut since the start of the cutting cycle in June 2024. A big important piece of news here is that the central bank also announced the end of quantitative tightening and restart asset purchases in early March to support liquidity and traction of economic activity. So what this means is that they're really ending quantitative tightening and beginning quantitative easing with asset purchases. What this means is that they are going to they're going to increase the money surplus in the economy, and when there is more money that's circulating in the economy, there's going to be more spending. And a big reason for that is because they are very unsure they have concerns regarding the tariffs that the United States would bring to test Canada's economic recovery. So a lot of the rate cuts have been completed. I don't think they have many left, maybe 1 or 2 more. But we're definitely still unsure about the effect that Trump's tariffs will have on the economy, and the quantitative easing is definitely a method to improve the inflation, improve the money surplus, and really kind of counter the big taxes that the Canadian exports will need to pay to the United States. So definitely, I would say the stance of Canada as terms of sentiment hasn't really changed much. I believe I would still say that they are definitely we have less rate cuts, which means that they are maybe one of the currencies that you would want to, buy more, rather than, for example, the New Zealand dollar that has over 100 basis points to cut. Um, with the Australian dollar, they're actually just beginning their rate cuts. So and so really, I think Canada, it's kind of neutral. I'm more leaning to still a short for Canada, but until then, until for further news, we really don't know for sure exactly. But of course, um, this is trading is just a probability game. This is all about chances and percentages. No one is very entirely sure what direction, what kind of what's going to happen for the Canadian dollar. But all we can really do is um, take advantage of the probabilities and make our moves that way. And going into the Fed, so obviously the Fed did hold their interest rates, and they, until pretty much summarizing this article, pretty much states that until they kind of know exactly what Trump wants to do with the policies, they're really going to be holding. They're really going to be waiting for the Trump's policies to be implemented, for them to understand what type of effect that will have in the economy, for them to make the decisions that they need to make. Now, for example, here it says the strong economic growth coupled with a solid labour market allows officials to wait for further evidence of cooling inflation before adjusting rates again. So they're really data dependent. It's very interesting here. So, unlike the other economies, the United States has a dual mandate for rate cuts and for rate hikes. So where all the central banks have a 2% target, that is their only mandate. The Fed have not only an inflation mandate but also an employment mandate. So the unemployment really needs to get to a certain level before they make the decisions that they need to make. So that's definitely one thing, definitely something to really think about. But of course, with a solid labour market, unemployment is getting better, so it's getting lower. And also with unemployment going lower, inflation goes higher. So it definitely, we'll see what happens here. But yeah, I think inflation is definitely. I believe it has increased. I'll double check right here. United States. Yeah, so the inflation has increased, and we'll see exactly what's going to go on. There was some conversations about even a potential hike, but that has been quite a while, and there hasn't been any word from that. So again, not too sure exactly. So really going back to the trading view and having a look at the dollar, with them holding rates and them also being one of the central banks that are going to cut the least, I definitely do believe that the dollar is definitely more of a buy, has more of a buy bias than a sell bias. And of course, right now it is at good levels, so definitely something to look out for. As well, so going back to Canada, I would still give it as a sell bias. However, there are definitely going to be opportunities to actually buy, to have some short time buys. And another thing to have a look for is that, so the Australian inflation also did come out, and let's go having a look at the Australian inflation. So there are two measures of there's inflation rates and core inflation rates. So having a look at inflation, we definitely see that it has decreased since the third quarter, which getting closer to their 2% target, meaning that they are definitely going to be more confident on cutting sooner, and I do believe it's going to be February now. So that is definitely going to be priced in more. And having a look at the core inflation, which is another metric to look at that excludes the effect of energy, which is very, very important. Sometimes you want a more accurate representation of how the Australian economy is doing, apart from the energy. And we can still see a 0.3% decrease over from quarter 3 to quarter 4. So definitely inflation is heading towards the right direction. If inflation had increased, I would definitely consider a delay in rate cuts. But since it is going down to their target, it does seem that they are going to cut in February. And having a look at the Australian dollar, definitely not a big. Oh, it has been a big day for the a big movement from the Australian for the Australian dollar, but um, it does seem like that the investors and markets are pricing the rate cuts. They have been doing it for the past week now. And as for the major news tomorrow, on the 30th of January, the Thursday, the Euro are having a policy meeting as well, which is expected also to cut, as well as GDP, advanced GDP price index. So another metric regarding GDP. There we go. Yeah, advanced GDP. So normally there are multiple forms of data coming out for GDP. It can be, for example, it's the same really for manufacturing PMI. There's flash, and then there's the actual final one. It's the same with GDP. GDP has multiple stages of data, depending on what time it is during that month. So yeah, Euro are expected to cut. Tokyo Core CPI is coming out, which is going to be quite big, as the Bank of Japan has constantly stated that they are data dependent, and if the data is going the direction that they want, that they're going to hike more and hike even sooner. And for Friday, yeah, Canadian GDP is coming out, as well as core PCE, which is really the Fed's preferred metric for inflation. So definitely look out for Friday news as well. As well as, before I miss out, German prelim CPI as well. Germany being, I do believe, their biggest, I do believe it's the Euro's biggest economy. So definitely will have a future effect, indication towards the future CPI of the Eurozone. And so finally, let's just end the video off looking at the Euro. Definitely, I would even consider that the Euro is quite expensive regarding their stance on rate cuts, and especially on the tariffs. So I am definitely expecting the Euro to devalue much more, especially at being at a kind of the supply area, and with the dollar also being in a demand zone. I do think that there's going to be many opportunities for the Euro USD, many opportunities really, even for the maybe Euro Yen. If good news comes out for the Japanese yen and they do continue to hike, could be some good opportunities for that. And really, yeah. So that's really it for the intra-week analysis. Thank you very much for watching. I hope you guys enjoyed and learned something. And there's, like we said in the previous videos, there's definitely going to be more coming out. Let us know what you guys are looking for. What kind of knowledge you guys are looking for, because we're going to make it. I do believe it's going to be an interest rate, and like a understanding what an interest rate is, and how that affects the forex markets for us, traders. That video definitely will be coming out soon, so please look out for that. But other than that, thank you very much, guys. I've been Yazdan, and I hope you have a very great and successful week. Thank you.